Years and years ago, when I was in a prop firm, I said something that garnered a laugh. Didn't mean it to be funny, and it was something along the lines of there were some swear words in it, and I didn't say it I wasn't very mad when I said it. It was just a matter of fact, like if I wasn't short, I'd be long. And other guys laughed in the office that heard it because it resonated with people. It's like when you tell a joke about marriage, it's funny because other people relate to what you're saying. And if you weren't short, you'd be long means you're bearish, you're short, you got an open position. And if you didn't ignore and you don't ignore what you're seeing, you didn't have a position, you'd probably open up a long position, but you're short. So now when you buy it, you're covering your short instead of opening a long. Either way, what's important in this business is not to ignore what you don't want to see. Do not ignore what you don't want to see. And so when the market comes back down here, you could see up here the several attempts it tried to get through 71. And 71 was an important area. And if it got through it, it would have released quite a bit. Something changed, however, in here. And I want to see if you could spot it first. I'm going to play it. And you could see my illustration here showing that this is kind of a bearish moment. And something changed, though, that went from bearish to neutral to bullish, or even quicker, bearish to bullish. If you're short, you really think of getting out. If you're bullish, that's the moment to get long. And not what I just said, but keep your eye all on here with respect to what changed that should get you to recognize it, to raise your eyebrows, to scratch your head. Did you see anything? I could take it fast forward and you could see it did rally out of the hole. Did you see anything from here where there's quite a bit of longs that come in? Right. Oh, I went back too far. Quite a bit of longs that come in. Back it up. I'll play it again. Quite a bit of longs that are in the market. It is sending it lower. 270 to 90 to 104 to 115, 100, 106, 180. It didn't flip from more longs than shorts in the market, but it did tighten up. Now you see it all come in here. If you weren't short, you'd be long. Now, if you wait and still think you're right, now you're paying up much later. And that's what turns maybe a small loser into a big loser. And now it's important to you. You don't want trades to be too important to you. All right. Now take another look at what we call the chaser. And you could see a moment where trouble dialing this up here. You could see a moment where they hit the bids and should go through, and then wham, they come back. And wham, the shorts come in. Oftentimes, when you don't want to see something, you won't. And that's often the most important information.